Hello guys, welcome again to a new video. In today's video I will be explaining the setup that I'm using in order to execute a high probability trade. So without wasting time, let me explain directly the conditions that you have to see in order to say that this setup is the right setup that I'm going to take a trade in. And also I'll be explaining the conditions and the entries that you could see with these setup. So the first thing that you need to understand is identifying the general trend of the market. I have explained in the previous videos and I've said that the way that you can use to find the bias direction or trend direction. So the first condition for this setup to be formed and to take a trade, you need to understand that you have to find the direction of the market. For example, if you are here bullish, we need to understand that we need to wait for a breakout above a resistance level. This takes us into the second point, which is identifying the level. I have explained also in previous videos how you can find the right levels, and have explained my multiple time frame strategy that you can use to draw your levels based on the higher time frame to the lower time frame. You can check all of these informations and all of these ideas on the channel, guys. And now we are going to draw the exact setup here and give you my other conditions in order to take an entry or not. So this is the exact setup. You are in a bullish trend, you are coming from the higher low to the higher highs, and as you can see, we are inside a range. As I said, I'm a breakout trader, so I'm going to wait for a breakout above the range, and in this case we are going to wait a breakout above the level. And as you could see, we have this breakout with this candle. So this is the condition. You need to see a clear closure above this resistance level in order to what? To understand that maybe we are going to continue up to fill other ranges up. Okay, now I'm going to talk about the entry point. So the entry point is based also on many conditions. The first entry point that I'm going to talk about is the way the candle is opening. So when I see the candle closes above the resistance level, I'm not going directly to take a buy trade. I have to wait for the new candle to open. When I see the candle opens here and then goes down without breaking the low of the previous candle and then continuing up to flip, that's gonna be my confirmation to take a buy trade. Let me explain it in a better way. So that the candle opened here and then directly start to go down to create a bottom wick. After it goes down and not breaking the previous low of the previous candle and then start to coming back up, this is gonna be the opportunity for me for taking a trade. That's gonna be my execution. I will be execute right here on the flip of this candle. Why? Because I have seen that this candle went down to grab liquidity in order to flip and continue up. So to make it simple, there is no reason for this candle to came back after it grabs liquidity. Okay, so the opening of the candle is very important and is very high probability condition in order to take a trade or execute a trade. Some people may take the trade right here on the flip, and some people gonna take it on the wick. And there is another condition for me to take a wick entry. I'll be explaining it later. Okay, the second entry on the same setup is when I see the candle closes above the resistance level but with a small wick. We have a wick but it is small, so what I have to wait in this condition, I gotta wait for the new candle to open right here, make a bottom wick, and then not taking a trade on the flip but taking a trade on when we break the previous candle wick in order to continue up. So this is the difference between them. If the previous candle has a bigger top wick, I can directly enter on the flip, but if I see the previous candle has a small wick, I gotta be looking for this candle to be broken, and then I will be taking a trade in order to continue up. So let me now explain where I could take a wick entry in the simplest way. So after simulating, after back testing, after forward testing, I found that the best way to take a wick entry is when you see this candle has a clear lower wick, a clear bottom wick, then I could take an entry. I see this candle has a clear bottom wick, is gonna give me an indication if the candle opens and starts to go low without breaking the previous candle body or of course wick. I could take a better entry on the wick than taking it on the flip or when we break the previous candle high. Okay, I will wait for this candle to start. When it's open, go down. I would be entering right here in order to continue up. As you could see, I would be entering here, as you could see, in order to have a better stop loss below this range and to have the break even right here, and also to get a better entry and much more pips in this case. So let me explain where I would not take this entry even if my setup has formed. So there is two conditions for me to take or not to take this entry on this setup. The first condition is basically when I see the candles, when it opens, start to create a top wick first, then creating a bottom wick. In this case, I wouldn't take this entry because the creation of the top wick is maybe gonna be just to grab liquidity and then closes below this range to continue down a bearish structure. Okay guys, I hope I explained this idea in a good way. Last condition, that I'm not going to take any trade in it when I see the candle closes with no top wick. Why? Because a candle with no top wick means there is no range to continue up to fill. Because as you know, this wick is a range to continue up. So taking a trade on a candle that has no top wick, it's not a good idea. So the only way that I'm going to take a trade on this case is when I see a new candle start to form and close like this, for example. Okay, if it's closed like this, it's gonna be a better opportunity for me to continue up. Why? Because I have all the confirmation from this candle, which has a top wick, and also it's grabbed liquidity from the bottom, as you can see here. So this gives me a higher indication to continue up, and I will be taking a trade when I see the candle start to move down, and then when it flips and breaks the previous high, I will be taking the opportunity to continue up here when I execute at this place, as you could see. So guys, this is basically the setup that I'm using, and also the entries that I'm using. If I saw my entries, I will take them. If I didn't see them, I wouldn't take any trades. So let me give you some examples on the chart just to clarify the idea. We have a very clear example here. We have the bullish trend. We are coming from the downside and we are creating a range to maybe continue up. We have this range that you are in, so we are waiting for a closure above the range. As you could see, we have this closure on this candle with the top wick, and also I have a bottom wick. So I may gonna take a wick entry on this level. I wait for the candle to make a bottom wick for me, and then after breaking the previous high, I will be taking a trade. And if I was on the chart at that time, I would be taking a trade right here, targeting the previous resistance and putting my stop loss below the candle low. And this would be my entry point, and this would be my trade in the simplest way. Okay, this is the idea, this is the lesson. I hope I explained the information in a very good way. If you haven't understood anything, you can ask me, you can put a comment, and also you can DM me on my Instagram. You will find all the links on the description. I advise you guys to check the other videos on the channel. You're gonna understand the idea of this strategy from the bottom to the top. So thank you so much for watching. See you on the next videos.